All right. Hello, everybody. Welcome back to the channel. It is 8 p.m. Eastern Standard Time. I just stuttered because I got a notification that Bitcoin is below 63,000, unfortunately. And Bitcoin is something we're going to talk about.
Yeah.
Unfortunately, it is, but that's going to be a large part of the conversation today. I'm here with Rango.
Yeah.
We haven't done one of these since January. Last time you were on, CleanSpark was like $5-6. So things have changed. Thank you all for joining. Markets are going to be open tomorrow morning. Thought we would do a stream with Rango. If you guys don't know him, he is an employee at Tesla, and so that's one of his highest conviction stocks. But we're going to talk about a bunch of things: Square, Tesla, fintech, Bitcoin miners, SoFi, Palantir. We'll probably get into all that stuff. Rango, how are you doing?
Pretty good. How's it going?
Well, Bitcoin is down.
Yeah, I'm not happy about it either. But I'm stacking though. I mean, so it's okay. I mean, I'm still buying Bitcoin, so it's good. Like, it's fine. It's not a.
So speaking of Bitcoin, let's get into that conversation. One of the main reasons we wanted to do this is because, are you guys in the same room? No, my bricks are much more real than Rango. There's no way his bricks are real. No, if anyone says his bricks are realer than mine, you're just not. You're not a nice person. Square is a company you texted me about. You said, "Hey, I'm looking at this one. I think there's a thesis here." So let's start off with that. I'll give you the floor. Why Square? Why are you getting interested on it? And what is kind of your long-term thesis for this company over the next 5 years?
Yeah. So this is part of like a larger play. Like in fintech, like I'm going long in a bunch of stocks. Not just Square, but Square is like kind of like my highest conviction. I would say one of the highest convictions. I would say. Still like kind of have a thesis, but I keep validating every quarter. I think the market still doesn't trust the management. That's why the stock is low, in my opinion. Obviously, this is why this is what I think. This is where I think the alpha is. I think that market is not like kind of in the mode where like I will believe it when you show me kind of mode. So the downside risk is not much given the valuation right now. Yeah, so this is the setup. So the reason I like the stock is majorly two things. Square said that I have screens to share, like, but the overall higher level perspective is Square management said that they have like a 12,000 people cap right now. They're not going to hire more than that, so they're going to like do an operating discipline in terms of hiring, and they want to hit the rule of 40 in terms of gross margin plus adjusted operating margin, where adjusted operating margin includes stock-based compensation. In their case, they are adjusting for a bunch of other things, but they're not adjusting for stock-based compensation. So when they say adjusted operating margin, that actually includes a stock-based compensation. This is something unique about Square. Just wanted to put it out there because they have faulted on the stock-based compensation in the past, right? So that's why I put it out there. So and they want to hit rule of 40, and also they've already hit rule of 40 for this quarter. Like if you look at the rule of 40 quarterly basis, they've already hit it. They're going to hit it the whole year this year. That's their guidance, right? This will and also they've started in that guide conservatively and beat it kind of mode. Like they started doing that. I think end of last year of sorts. I think there is like a shift in management focus where Toast came in and getting that kind of valuation, and Jack is like, we should like do something better. And I think they're not being valued as a SaaS play right now. They're just valued as like, I don't even know what they're being valued as because their valuation metrics does not make sense. And also given that they have a big moat in F&B, like food and beverage industry, where if you go anywhere around here in the Bay Area, like it's like a Peter Thiel. I see Square almost everywhere that I'm paying, and I'm spending a lot of money locally. So I see a lot of merchants using Square, and they have Cash App.
Is that the main thesis for why anyone would buy Square? Is that they make most of
No,
their money off of merchant fees, essentially?
No, actually, no. They have two advantages, right? They have like Cash App and Square. There are two vectors there. Cash App is kind of like going after like all the underbanked. So they're doing the direct deposit. They started doing that, like, and on the merchant side, they have the Square side where you're taking payments, and their growth is not that spectacular there, but according to management, I see a growth trajectory there in international business. So there is a growth trajectory there, and Cash App has a growth trajectory in banking side, right? And also there is a growth trajectory in when you connect the Cash App side. That's like more like speculative bet where they want to connect, make it a two-sided bet where like if you are using Cash App and you are actually in the locality where there are Square merchants, they kind of like connect these two together. Like, oh, you might like this, your friends are liking this. You might get a 5% discount, 10% discount, pay on Cash App. Like, like, and if you use more of that, there is like a more long-term advertising play there. But that's based on execution. I'm not taking that into consideration right now. But that's like more like an optionality there where it's called Square Locals. They're launching it they launched it in 2 cities. If you know the Square Locals inside Cash App. So and Cash App is a great product in terms of like Cash App. Cash App is a great product overall. I use it Cash App a lot, and I like the product. And it's a combination of I like the product, I see it everywhere, and also the valuation is great at this prices right now.
Why?
They're
Let's
trading
talk
at
about that. Why? What is the valuation that's making you
It's
attract?
it's trading at like on an anticipated EPS basis, trading at like 18 times earnings for coming next year, given that they're expanding operating margins 18.18. The trailing basis they are expensive, but that's because they have not expanded the operating margins yet. They're guiding to do that exactly that this year. So
Okay, so why is Square down this year? Because they had Q4 earnings and they jumped up to $81 on March 13th.
yeah, there is no reason from what I see. There was like a small report of like fraud, which was ended up being nothing, um, from what I see. And I think majorly the weakness is due to the fear in the economy because if the economy rolls over, um, you get kind of like the SMB kind of rolls over. I think that's where I think that's why Shopee was down. There's like some weakness in the economy recently, so I think that's why all these fintech merchants, all these are down. And the market is pricing some, so there is like a 10-20% downside if it goes down. I think the valuation is too good, and I think buybacks will support the valuation at this point if it gets too low and you can buy more.
Do you think it's also down because Bitcoin fell from like 75 to 63 since then? And
but they as much as they talk a lot about Bitcoin, they don't have much Bitcoin on their balance sheet. And also that's another optionality long term. They're going to make Bitcoin products and put 10% of their gross margins inside Bitcoin. That's another set of micro strategy like optionality, even which I'm not considering. But they're very pro Bitcoin folks, which I do like to some extent. And So I do not think the Square being down. Maybe it's got to do something with Bitcoin, but they did not rally like crazy when Bitcoin was going up. So they've been like went to
yeah.
80 after an earning speed and then came back down. The balance sheet is not that much Bitcoin heavy. So I have something to share if I can share the screen.
For those that are here, we are live, guys. We are live on a Sunday night. We are here.
Present share screen.
Bitcoin is fighting for its life to not go to 62,000 right now. It's
Oh
fighting
my
for its
God.
life. I like this though. I think this is a good setup. I think this would do well.
Chrome tab. 1 second. Sure. Okay. So this is Square. You see the revenue growth. Yeah, there's no point looking at gross profit growth here. Sorry, revenue growth here because a bunch of their revenue comes from Bitcoin where they hold for milliseconds and then they sell it. So like a better metric to look at is gross profit. And the recent Q1 earnings, they kind of like beat. They guided for 17% gross profit growth, but they came in at 21% plus gross profit. I think as you can see, they're bottomed out on the revenue side, and I think they're going to reaccelerate now, or at least stay here, even if the economy kind of like weakens. Give the tailwinds here is Cash App and Square international growth. Like it's not existing same store. It's not same store growth. It's international growth. So even if same store growth reduces a little bit, I think it should be fine. We will still hit the earnings estimates here. And as you can see, the operating margin, they were not doing anything till Q last year of September. Now they're starting to expand. And if you look at adjusted operating margin, I don't know if
what are their adjusted operating margins? I'm curious.
Then it's not here. Let's see. It's adjusted operating margin. I think it's 18%. Adjusted operating margin is 18%. And most of the so basically they hit 39. So 21 plus 18, I think they hit close to 40. The adjusted operating margin side. So they are already hitting rule of 40 this year, like they guided, and the adjustment is all like amortization and their afterpay acquisition, which is pretty bad actually. So
yeah, they spent 28 billion on afterpay.
Yeah,
but hold on. Let's talk about this. Let's talk about number. Let's talk about leadership, because the numbers are fine, but they wasted 28 billion on afterpay. It's probably the dumbest acquisition ever. And then they spent and then they spent 300 million on Jay-Z's music app, which was also the dumbest thing ever. And that's because your boy Jack Dorsey decides that he likes to do things randomly, along with collaborating with the US government when it comes to censoring people on Twitter. But he claims he's the free speech advocate. He's the like Bitcoin advocate. He's the anarchy advocate. That guy to me is just confusing as hell. I don't understand how to read him. I'm curious why you trust him in this investment.
Honestly, I don't. That's why it's a buy and validate. If they make another dumb acquisition like Afterpay, I'm out. Like it's like
they're probably not going to make another dumb acquisition. But the point is, they made two really bad ones that hurt the balance sheet.
They did. That's why even though that's why I'm not buying stock till now. It's more of like a play where, have you guys learned your lesson? Looks like they've taken the medicine and they cut a bunch of people, and I think that's why the stock is trading at these valuations too. They're not getting a premium because they've done some very bad capital allocation decisions in the past, even though they have like a pretty monopolistic place in the food and beverage industry where almost everybody uses them.
Right.
Their capital allocation has been horrible, so to say the least, right? So and just wanted to, like, Afterpay was paid in stock, right? So it ended up costing 13 billion, I believe. It started out as 28 billion, and then like the stock kept going down, and I think it had closed at when it was 13 billion.
I didn't know that. That's good. That's good for them.
Yeah. So it's definitely like a play where it's buy and validate. It's a lot more work than I'd like to do. But usually I play when I trust the management fully, where I just buy and hold the stock and just like kind of listen to earnings calls, and if there are no red flags, I'm fine.
So you're not buying yet. You're taking your time to buy.
No, I'm DCAing into it. Like I've started buying already. So I started buying already. I have like, I would say 40% of my target position. I have quite a bit to go still to buy. As it goes down, I'll keep buying. That's the goal here. Yeah.
Okay. So speaking of fintech, let's transition the conversation to another fintech that I believe you're still long. Sofi.
Yeah, I'm still long. Yeah, I'm still long Sofi. It's been a hard long, honestly. It's been like just stock keeps going down and down. And
why do you think it's selling off so much? Why do you think?
The reason sell off is due to some big investor dumping the shares. That's the reason sell off for. Like, they have been early Sofi investor and they kind of dumped their shares. So, but there is like nuances to it. They kind of like had preferred shares and a bunch of options, which they did not, which went underwater and expired. And I think they were losing out on their board seat, and they're more like an early kind of like startup investing style people. They've been there since like, I think Series C, late stage venture, somewhere around that. And then they've been holding it till now. I think they were losing out on their board seats unless they would acquire more shares. I think that was happening, and so they decided to just dump all their shares. I think that's the nuance in that. I don't know if there is anything more to it than that. I don't see anything which is bad. I do see that the management is kind of slowing lending, I think, which is a very responsible thing to do. I think they're taking the short-term hit to not risk the company. I think that's a very responsible thing to do. I think that's the right thing to do. And their like there is some FUD on the fair value marks on the loans, but these loans are hedged, even though their fair value marks on the loans did go down this quarter. Their tangible book value went up. So if you see that, it's looking pretty all right in my opinion. I think there's a lot of fear again. Like, yeah.
Can we talk about tangible book value? Because there's a kind of school of debate, a school of two different schools of thought in terms of this debate, that SoFi either should not be valued on tangible book value, price to book, which means SoFi is technically overvalued right now, given how most banks trade, or SoFi is not a bank, it's an actual fintech. There is a growing technology part of the business that creates a SaaS multiple that should be applied to SoFi, which means it should be in the mid-teens right now instead of 630. Where do you come on that side of the debate?
So it's like you need to think from first principles on this, right? Like it's the market trades in like back baskets, so they're still valuing it in tangible book value. So when do you okay, the first principles thinking for this is, when do you value your company based on book value? You value the company based on book value when your growth is constrained by your book value. All right. And like basically, like say for example, if you have like a manufacturing firm which has factories, and that factory can only like produce 10,000 goods, and you cannot book book more than that, then you value a price to book on that, and you'd be like, because this asset cannot only produce 10,000, it cannot produce 100,000 like software. That's why you don't value software companies as price to book. You don't value Apple as a price to book, because their growth is not like capped by the book value.
Right.
Growth is like, so that's the thinking of like valuing a company in price to book or price to tangible book value, right? So what is SoFi guiding right now? They're saying that in 2026, their 50% of their earnings will come from lending, and 50% will come from financial services and technology platform. And so basically, they're saying that the 50% of their revenues will not come from anything which is constrained by book value. That's what they're telling you, right? They're going to diversify out, right? But 50% is still, right? They're still constrained by book value, right? Like 50% of their revenue is still constrained by book value, if you think about it. But their capital ratios are so high that they can easily lend out more if they want to. So yes, it is like they choose not to do it. They can easily expand their book and increase their book value, right? And their price in that case, should it go up? That's what you're debating, if you're valuing it on tangible book value. But if till now, management has said every guidance they put forth like properly. Now they're giving another long-term guidance, right? I believe they'll hit that, right? In terms of EPS, and even in terms of like the revenue diversification, right? So as soon as your 50% actually comes from like financial services and technology platform, I think they should not be, at least part of it should not be valued as in the form of tangible book value, right? And that's because they're not constrained by your book value again, right? So that's the thinking behind it. And also they also guided that they'll keep growing. They gave an EPS guidance, and then they're also saying they'll keep growing EPS beyond that at 25%, like beyond 2026. So at this point, it's more like I believe what you're telling me, unless you're giving me a reason not to believe you. And my cost basis is actually $7. I'm a little underwater, 10% underwater. The best, I think I have a decent cost basis. Not the best. It's not like $5 or something, but it's still not too bad that I'm bag holding or anything. So I'm very comfortable holding and even adding at these prices and slowly adding at these prices. Worst case is yeah.
If no bank gets a premium above its tangible book value, outside of like the price of tangible book value, JP Morgan, I think, is like 1.5 or something. Do you think the market would accept like incredible amounts of growth on the other parts of the business to be able to give them that premium? Like, my question is, market psychology is not going to give SoFi, which is a bank, the SaaS premium against all the other banks just because they have growth, unless the growth is so substantial from the parts of the business that are not constrained, as you mentioned, above its tangible book value. So how do you think the market ends up reading the story?
So I think it'll trade on earnings. It might not trade on like 17 times sales like SaaS, right? 15 times sales, 16 times sales, right? Even gross profit, like it might not trade that way, but it'll definitely trade on earnings. It should at least trade on market multiple earnings, right? It should trade at least like, we definitely trade on P/E, especially if your earnings, EPS numbers is coming out as what it is, right? If you look at value investors, banks are valued at like pretty decent P/E. I think if you have a bank which is giving you a return on equity of 20+%, like Sofi, their tangible book value, price to tangible book value, even if you value it as a bank, which future growth given, and the trajectory of member growth, and then the financial products they're going to take up, right? Even if you value it like that, I think you still have like a 4 to 5x over there over the next 5-6 years, which is pretty decent. And if market decides, okay, the risk, if you take off a lot of people are on the sidelines because of balance sheet risk in this environment. Once you start like taking that foot off the pedal, when you start like kind of like lowering rates, then you're suddenly like taking off risk, right? You're taking off risk from the market, the delinquency risks, and like securitization. Like you can rotate your balance sheet. Like your loan books can be sold pretty fast, and you can originate more loans pretty fast, and you can even expand your balance sheet if you want in that environment, right? So suddenly you'll start like you'll reprice a bunch their book. You'll start repricing their book for lower risk in the future, because even if you're dealing with it as a bank, I think it's valued at best fair value, and with great management and fair price at best. I'm talking about, at least fair value with great management, which I'm willing to own like at these prices. So yeah, so it might not be like this disruptive technology company. You don't have to own everything as disruptive technology company, right?
Yeah.
Even if you have that as an optionality, right? Even if you have that as an optionality, is a good own at these prices. If you're not FOMOing into other names like AI names, I think you can outperform with this name over the next few years, given the management is very confident. That's just my thesis. Like it might play out, it might not. Yeah. Till now, the thesis has played out, but the price has not. The stock price has not showed. That's what's happened till now. Yeah.
Right. Okay, let's transition to another company that you know pretty well. Good old Tesla. Fun stuff has happened over the past couple of months. In terms of the stock, fell to 130, bounced up to 180. Elon got his compensation. How do you feel in general about the compensation and Elon actually getting what he deserves?
I mean, it's great. I mean, like that kind of puts this was actually a long-term risk for Tesla, in my opinion. I mean, not like it won't be a bad investment, in my opinion, right? Like I'm not asking to buy Tesla stock, anybody, not giving out any information, this is just my personal opinion, what I'm doing, just putting it out there. Elon leaving or not leaving, or like, I don't even know if Elon would have left or not, right? It's just kind of messed up for like just overall investing. Like you invest, like you as a shareholder are supposed to have certain rights, right?
Yeah.
If you don't have that, that's a huge risk in terms of just investing your money in the stock market in general. So it's a good thing, and I feel like Elon is a person where I think more this gesture from the stock, the shareholders, I think he'd appreciate it a lot. Even whatever happens from this, it's not about anything. It just means a lot to him, that the gesture in retrospect, whatever happened, right? It means a lot to him. So I think he will push the company itself forward. I think long-term thesis is intact with Elon right now, and it was, in my opinion, in my view, I would not have stayed with the company without Elon and the help. The reason I joined is because great leadership, and yeah, so you don't want to start a company. Yeah.
Do you believe in his vision that the company has basically, in my opinion, transitioned from selling cars to the dream of FSD and Optimus. And I think it's pretty obvious. And I mean, dude, I'm seeing it everywhere I go. I'm seeing people buy less EVs. Hybrids are taking off. My family just bought a hybrid. I saw a Rivian for the first time in my neighborhood. Like, I think their Q2 numbers are going to suck when it comes to cars. And I think deliveries is not the metric anymore. And Wall Street will adjust as well. How confident are you in the FSD thesis actually playing out over the next 5 years?
I mean, I use the product every day, almost every day. I've not had any interventions for a long time, in the Bay Area at least. Uh, all the interventions has been inside the parking lots and stuff like that, minor stuff. So I think this technology it's got like so much potential, and like I just don't see any other product like this out there. At the end of the day, Amit, it's just sometimes investing is simple. It's just you use your product, you love the product, you own the stock, and just forget about it because you just trust management. And what are the products that we've come out with recently? Cyberrock is an amazing product. The new Model 3, you should drive. Like you should drive the new Model 3. It's a brilliant product. The Model Y is still one of the best valued car out there, in my opinion, for the price, right? Everything else is short-term gyrations. Just sometimes just use a product. If the company is pushing out great products over and over again, you got to give them the credit for future execution. That's my opinion,
Do you
and
think the
that's what
street?
gives me confidence. Yeah.
Do you think the street's going to believe the FSD vision over the next couple
Um,
years?
I'm, um, I don't know, but usually Wall Street is like there needs to be a clear earnings growth trajectory. Till there is no clear earnings growth trajectory, stock is going to do what it's going to do. You know,
Right.
so generally you need to have an earnings growth trajectory that is very visible from far out. If it's not, and the alpha is when you can see a great product, and eventually everybody else will see it. That's where the alpha is, and it's more like just sit on the stock and keep it as part of your portfolio, because you got like this is why I am not an advocate of all in on any one stock. I mean, sometimes you go all in if you're like the valuation is stupid cheap and stuff like that, right? But overall, going all in on any one stock, I'm not a huge. It is not regarding Tesla or anything. It's just any one stock, because sometimes the sector is just hated, you know, like, and then you see all the other stocks running, and if you're not owning those, you get the sense of FOMO, and then you don't want to like deal with that, like in generally, like, so you got to own, like, there are good stocks in every sector. I think that people should own a bunch of, like, yeah, I have some NVDA, I have some Amazon, I have some Google, I have some Microsoft. Everything is on this year. All that as part of 401k. So I don't have any FOMO. Like a large part of the portfolio has not moved that much this year because it's all interest rate sensitive. Um, and my thesis on the interest rates were completely wrong, right?
Yeah, that's true.
We
Yeah,
didn't get it. Yeah, we didn't get any cuts. We might not get any cuts this year, right?
I think
And
we're getting at least one. I think we're getting. Okay,
yeah.
we'll talk more about the Fed and stuff later. Let me ask you about this. Last question on Tesla. How bullish are you on Optimus?
I mean, it's too early to tell. I like it's just too early to tell. Let's see, because you don't know the industry yet. You don't know the TAM. I mean, it looks obvious the TAM is big, but also you have to understand that there is going to be a lot of competitors. The industries is as a whole very early, and you don't know what industries are going to show up. Like the TAM might be unlimited. This is where you bet on leadership and forget about it. Like Elon is always has a track record of winning, so he'll keep winning, right? Like, but as an investment being objective enough, I just don't have an opinion on that, because you don't know the landscape just yet. Like, what is the margins going to look like? How easy are the problems going to be look like for example, FSD has a clear companies come up going bankrupt, companies come up failing. See the number of autonomous companies which has gone bankrupt till now. It's just like a graveyard of companies, right?
Right.
So you kind of get some kind of, like, conviction from what has happened. Now the whole land of we don't know the land yet. We don't know what is robotics. I mean, if Elon says that robotics is going to be huge and we're going to execute at a very high pace, I'll believe it. Let's put it that way. I'll be so, yeah. So it's an exciting project for sure. if you're working on that, if somebody's working on that, but you don't know the market yet. So as a valuation to put a number on it, I would feel very uncomfortable to put a number on it right now. But it's still, it will be worth a lot if the execution is there, but you don't know the margins, you don't know anything. So it's very hard to value it.
Okay. NVIDIA.
Yeah.
Is it overvalued at 130 or is it Cisco? What's going on here?
Man, like as much as the stock has run so much, the earnings is kept up and it's going to keep up. I don't see I don't see slowdown. It's like an arms race too right now. Whoever is building a better product wins. Um, it's like an arms race. Like everybody, like nobody's going to slow down. Right? Just imagine, are you going to slow down on AI chip spend right now when everybody's building around you? And are you going to like risk losing out? It's very hard to do that right now. So as much as the stock has tripled, I guess, and I'm not selling a share. Whatever I have, I'm holding. It's in my 401k, so it's not a big position. It was like 6% of my 401k. It's now 18%, not even trimming. It's just going up and up and up. And if you look at the earnings estimates, it's keeping up and they're beating those estimates. And I don't see anything slowing down. So till this doesn't slow down, I have no reason to sell this. And even if it dips and crashes 60%, I'll just buy more. Honestly, it's a great company to hold. So I'm never so like this is the advantage of like having a 401k and you having stocks in there. You don't need the money for 40 years. You just like keep it and then like 30 years or whatever, whenever I retire, right? And
Right.
I just hold this company forever. If I have to buy more, I'll buy more. It's not a big deal.
So you don't
Yeah.
feel like I mean, obviously if they put up $5 a share next year, you know, closer to 150, 160 is the valuation. You don't feel like the front running of that, I wouldn't even say aggressive EPS target, but you know, a little bit aggressive EPS target is justified because the quality of the company is so good and no other company is
Yeah.
growing that much.
And I know a lot of people who work for Jensen, so I know firsthand. I've not had firsthand, I have like secondhand. I've heard like a few things. It's not any confidential information or anything. It's just the way he is. Guy is super paranoid. They had a hiring freeze recently, by the way,
Mm.
especially when they're like making so much money. They actually froze hiring to kind of like operate efficiently more inside. So they're pivoting a bunch of stuff into software. They're going to compete against AWS next. If you're software 2.0, like software 2.0 is like more AI is eating software style thing. They'll definitely compete with AWS and GCP because it's at the end of the day compute and storage, right? And you want to give abstractions to build applications in an AI paradigm. And if NVDA takes up like a bunch of like compute hosting space, right, which is totally possible, given they have the software stack, they have training, they have inference, they have everything, and their margins can inflect up or maintain at this level. So I'm not saying it won't go down. You don't know how the curve is going to look like, right? Like suddenly, if there is a short-term drop in like compute demand because there is a big recession, everybody has to like kind of curtail spend on compute, for example, then NVIDIA goes down, but that would be a buying opportunity. So, but this is a company that you do not sell and just keep holding. There might be 60-70% drawdowns, totally possible. My cost basis in my retirement account is like $220, $200 or something. Oh,
Wait,
no,
what do you make?
$20 now.
Yeah, $20. Yeah.
$20. Yeah, it's a 10 to 1, 10 to 1 stock split. So it's I want to buy more. I kind of missed. I feel like I missed out because I did not have enough shares. So if it corrects like a lot, I will buy a lot more. Because they are pivoting into software. Jensen is great, and they're executing. And the advantage they have is they have a bunch of workloads they're supporting. They use that workloads to design faster chips, and then they expand faster. Like it's like those land and expand stuff. Once you know the workloads, you can design chips for that. So it's kind of like a hard to compete with them. Maybe AMD can compete. I have AMD too. Maybe AMD can compete with them, but it's very hard to compete with them. But also to be very honest, the sentiment is too positive right now, right?
I feel
It's
the
just
opposite. I feel like everyone thinks it's going to crash.
oh, you
Right?
think yeah, like but the price action says otherwise, right? You
Yes.
are right
Yes.
because I think the price action is just trading on earnings estimates right now. It's not there is no multiple expansion, right? So
Yeah.
that's when there is no like FOMO of sorts. There is no like multiple expansion, right? So that's why you keep like even yesterday the BG2 podcast, that guy says it perfectly. He says he's at a much higher estimate. There's no reason to sell. There's a clear pathway of the stock keep going. So don't sell. There's no reason to sell right now because I just don't see a slowdown at this point coming. But there will be a slowdown eventually, right? Is the slowdown before they pivot to software, or like before the earnings coming from software, or is that not going to happen? Because they cannot maintain 95% margins on H100s forever. That's a fact,
Well, so
right?
let me show this chart. I thought this was a great chart that I haven't seen in a while about Nvidia's growth. So right here, this is from 2004. They started
Mm-hmm.
at 10% growth, 18%, then 2006, 2007, they got to 30%. Then they fell for about a decade until
Right,
2017. They got back to 40%. This is like more
right.
gaming stuff. Then they
Yeah,
fall
crypto.
2019 to 6%. Yeah. Yeah, crypto as well. Then 2020, 2021, Bitcoin gets back to 70,000. So there you go, 60%. Then they fall in 2022 and everything crash. Now they're at 208%, but it definitely is cyclical. The question is, will the
Yeah, so
cycle just keep going higher and higher for the next couple of
no,
years?
obviously they're not going to maintain 200% growth, like, right? So it's going to come down 100%, right? Um, but one thing you have to know, in 2008, they were more like cyclical based on the CPU. Like that's because they're a GPU company, gaming and NVDA graphics card on your laptops, right? So obviously 2008 there is a huge recession, so you have like big inventory and you have to cut prices. So it's a consumer, right? Everything else is consumer. Like crypto is again consumer. Ethereum mining was the crypto. Next crash was like due to the crypto Ethereum mining, right? But this time around, the demand is from enterprises, data center and enterprises, which is a much more sticky. Like it's more like put hardware in enterprises and sell them more software, right? It's gonna happen. I mean, these chips are huge investments, man. Like these chips are like, so it only makes sense to like add more stuff to it,
Yeah,
Yeah.
and if you do kind of a sort of basic DCF on it, in order for them to maintain this multiple, they're going to have to grow 22% revenues year over year. So not 200%, but 22% by
Yeah.
2026 to 2034, which would
Right.
be $1 trillion of sales by 2034.
Yeah, I mean, if you think about revenues, this is where like there's a fallacy, right? Sure, if you keep selling chips in a cyclical environment, but the margins are pretty great for sure. Um, but if you start selling software on top of it,
There you
right?
go. Yeah.
So like your margins are pretty high on top of it. So you do not have to grow sales that much. But if you start getting valued on the ARR side, then suddenly you get a premium on those sales, right? So I think eventually they would have to pivot that side. It's just about timing, right? 100% there is going to be a dip in the stock. You cannot keep going up like this all the time. But it's such a great company that I think the management is going to figure it out. And as long as Jensen is at the helm, I think it's okay to keep betting on him. And a lot of insiders are selling too. So it's one of that where if you have like 70% of your portfolio is Nvidia, then definitely you should take money off the top. Don't keep holding, right? You have to sell some, but if it's only like some part of your this thing, you just keep holding. It's not if you don't, especially if you don't need money immediately. It's about like owning the company and wanting to buy more, but you're not getting the price. I would definitely not buy at these prices. I'm not buying any of the shares at these prices. I'm just holding the stock.
Let's transition into AI eating software. So a decade ago, the thesis was software is eating the world. And that's where you
Hmm.
got the Snowflakes, the Datadogs, the Palantirs, the Databricks, all these companies get these massive premiums, valuations. Some of them went public. And then Salesforce had earnings, and it kind of showed us either it was just a hiccup or there's a trend of AI being more valuable than traditional SaaS. And a lot of these companies are going to get a little bit of a haircut. How do you feel about the hyperscalers and their approach to SaaS, and then the traditional B2B software enterprises, their approach to SaaS, and what needs to be done in order for them to keep their multiples?
So I'm generally like it's very hard for me to buy an enterprise SaaS companies for in my portfolio. I only have hyperscalers. I have some Palantir, but it's not a big position. I before I could build up the position, it just ran away. So it's still a small position. It's $19 or something cost basis. I sold and then bought it at 10% higher. So basically, yeah, so in terms of AI eating these SaaS companies, as long as they're competent, they're it depends on where their revenue is coming. For example, right, like Salesforce, they have been like historically like an acquisition kind of like company. They keep acquiring and then they buy the revenue and then they build integrate it into their company, right? That's historically how they have grown, right? But what you do not know right now is what are the number of acquisitions which has to be written down, because those acquisitions revenue does not make any sense anymore. Because, like, for example, if you have like an email client having to send a bunch of emails to people, Mailchimp, I think Salesforce has,
Yeah.
that is kind of worthless right now in the AI world, right? So the whole acquisition needs to be written down, right? So you do not know out of the $36 billion how much of that revenues need to be written down. I honestly do not know. I have to dig deeper into this, right? Um, and Salesforce in general, like this is why I stay away from premium enterprise SaaS too. As much as it's founder led, and I think they'll probably do well in the future, like because they've survived all the transitions, internet, mobile, and they've grown through all that. So historically speaking, they should survive this too, right? um, but I don't own enterprise SaaS which does not have distribution. I mean, Salesforce does have distribution to some extent because they are not already, but I want somebody to own like compute, and I guess I only own hyperscalers, and Palantir only for the government business. It's cool. Like you need to have that kind of some kind of cash flow, such as like big moat. That's what I
Right.
look.
Right.
So as much as like that's why I don't own any enterprise SaaS. It's just hard for me to keep doing technology DD over and over again and being right over and over again over a long period of time. And all these smaller specialized enterprise SaaS companies, they always trade at a much higher premium when they are smaller, and as they get bigger, their premium kind of goes away. And this is why I'm kind of like, we can transition to Palantir from here. Like I have some pause in acquiring Palantir in these prices, even though I'm long-term bullish. If you want, we can transition to that.
Yeah, let's do it. Go ahead.
If you look at Salesforce, right, like so Salesforce is a $225 billion company with
Yeah.
$35 billion revenue, right?
Yeah.
So they are trading at 6 times sales, like 5-6 times sales, with 30%, 20% operating margin, and great free cash flow margin, and literally everything that can go right has gone right for them, right? And they're still a $225 billion company because suddenly you're writing down the terminal valuation of this SaaS company. Either Salesforce is undervalued, extremely undervalued, or Palantir is extremely overvalued. I mean, at the end of the day, you're a $55 billion company making $2.75 billion revenue. 2.7, is that what they make?
Yeah,
Trailing
basically
12 months?
2.7. Yeah, pretty much.
Yeah, and you're $55 billion company and making $2.7 billion, even though your margins are already expanding, right? You're growing at 21%, and Salesforce has grown around there, around CAGR for the last 20 years, 21%, I believe. So everything which needs to go right for them to hit a valuation, maybe a $300 billion valuation, which is like maybe a 5-6x from here.
Yeah.
And they have to like more than 10x the revenues.
Yeah.
10x sales.
Yeah.
Right. Which is like a lot of it priced in, right? Like at this prices, right? Like I like how they're executing with the I told you one metric which I will be seeing, which they've actually executed on, honestly, to be fair, right? They they've kept their operating expenses low while growing out, and they've expanded margins while keeping stock-based compensation low. And this is what I was looking for. Actually, they expanded, and the stock has reflected that. As you can see, I think the market was looking for that, and the stock has rightfully reflected that. And there is a huge AI tailwind there, right? But like, if to buy at these prices, I look at Salesforce valuation, and if Palantir is going to be Salesforce, and I don't want to own Salesforce because they have an expensive SaaS product. Um, it's just hard to fathom the number of things which needs to go right for them to hit these valuations for 5-6x from here, for over the next decade or so, or even 10x from here is a $500 billion. A lot needs to go right, right? So it's a very hard double from here. So that's why I'm not acquiring the shares at these prices. But I'm definitely tracking the company, and if there is any dip, and if the market misprices it, if there is anything, I will be buying shares of Palantir at the right price. I'm not afraid for me to run away. It is what it is, right? It's just the risk reward isn't there for me right now. I like to buy companies when it's hated by the markets.
Yeah, I mean, look, the stock's also up 40% year to date. So for anyone who's hesitant to buy a stock up 40%, I totally understand that. I think the two elements that could make that everything go right version for Palantir is the government business, which Snowflake, Databricks, none of those guys have that. And I think that is only going to grow more and more as NATO decides to adopt Palantir, and that's a bet I'm making. And number two is I do think Karp is right about the necessity of an ontology and what that means in order for enterprise SaaS to even be meaningful. I think part of the reason enterprise SaaS is failing for a lot of companies, and people are realizing that Snowflake is just a data lakehouse, is because there's not an actual ontological structure of data. If AI and LLMs are only relevant with that ontology, which at this point I'm basically convinced about, then I do think the ability to grow at 30% year over year, if AI in the enterprise is essentially attaching LLMs to business data, and it's going to be competitive. OpenAI just acquired a company to try to do the same thing. Like, if that is
Rocket Center.
if that is the thesis, I think Palantir gets back to 30% growth. And then just the cool premium, which I think we got to give the cool premium to Palantir, that can also make it, quote unquote, a little bit overvalued, but still reasonably valued.
Yes, I do think, I think about 30%. This is how I see it, at $24 or whatever per share. 30% year over year growth is kind of like, if they don't hit that in the next year or two, I think they're gonna have either a flat stock or a correction there. I think they need to hit that. Like they already are priced in to hit that, and I think they will. Like looking at the customer count and total deal value and Bootcamp doing what it's doing, and just like, unless everything goes wrong and enterprise SaaS spend is like paused, I think they have like a nice little niche where all these old tech companies are has to digitize everything and like have to apply AI and become more like efficient, right? Like all this physical infrastructure, and even like just these old not tech savvy companies, they just want to like buy a solution for everything, right? So that's when Palantir will excel there.
Well, also
so I do think they will hit that.
The byproduct of this GPU training has to be productivity and business effectiveness and operational effectiveness in the enterprise. Otherwise, training all these LLMs, like, consumers are only going to try out so many AI products until we get bored. Like, there has to be a real enterprise use case. And I think that TAM is closer to $1 trillion, which means, if Palantir can capture 100-200 billion of that over the next decade, that would be really beneficial.
No, yeah, I agree. It's totally right. If Palantir needs to catch a bulk of that, and if you CAGR 30% their revenue for a decade, what would be the revenue 10 years from now?
It's about 10 billion.
It's a question.
10 to 12 billion, something like that, I think.
That's it?
A little bit. No, it's probably a little bit more. And because if you CAGR at 30% till, you're doing 2034. No, that's going to be closer to 20 billion.
No, 30. Yeah. 20, 30, 25 billion, or put like 30 billion, but Salesforce is still at 35 billion. That's what I'm like. That's where my pause is. Like, Salesforce is at 35 billion. At the end of the day, okay, it can be worth like 50% more than this, right? Okay, fine. Salesforce, it's a lot of fear in the SaaS market right now. Maybe fair value is somewhere around $350, right? That's a 10x if they CAGR at 30%. And nothing goes wrong, and they keep going in the peak hype AI hype cycle, which needs to be going. At some point, there's going to be fear, right? Like
Yeah.
10 years is not going to be a straight line. And I'm going to buy shares when the market hates it, even if it is higher than what it is right now. Like it can go to 150 and come back to like 30. I'll buy it at 30. Like giving you an example, right?
Right.
So I just wanted the market to hate the sector, like how market hates fintech right now. I'm buying fintech, right? That's my style of investing. Yeah.
Right, which is funny because the market is kind of hating SaaS right now, MongoDB, Snowflake, but they're not hating
Yeah.
Palantir, which I'm
Yeah.
like surprised that the market's not hating Palantir, although I kind of understand why. I think they're rotating out of some of the names that have been losing in SaaS. And so Q2 is really important because if Palantir keeps giving them a reason to not hate them, maybe that premium continues to sustain itself.
Stays. Yeah, makes sense. And so I think there is like a pullback in enterprise spend right now. Like there's definitely a pullback in enterprise spend right now. They're like looking at it and saying we are gonna like reallocate bunch of SaaS 1.0 into like AI because we need to increase productivity in our organization. They're like kind of evaluating every tool they have inside the companies and saying, is this like an AI first tool, or is this like for example, like there is like Confluence, right? Like Atlassian, right? Like they have Jira, Confluence, and all that, like all that products. It sucks ass, right? Like if I were running the company, I would try to get rid of it once and for all, like in this environment, because I can justify my spend to the CEO, CFO, saying, hey, these tools are shitty. If there is an alternate, obviously there needs to be an alternative, right? These tools are like reducing our productivity. This is not like there is no like a chatbot, or like chatbot is the worst thing you can. There is nothing where I can just go and just ask for stuff and I get reliable stuff back, right? Palantir has some kind of solution like that, right? So, but I have to go look for stuff, look for like 10,000 different places, my tickets, and I have to manage my tickets, and I have to manage documentation, and I have to know where my documentation is somewhere in the black hole, and whatever documentation I'm adding is only viewed by me and like 5 other people. It's not like enabling the whole organization alpha. These all, like Atlassian is a name I would never own because I know how bad it is, right?
Yeah.
It's not AI first. It's so hard to like get data from it. It's so hard to like use it, right? I think there is a heavy re-evaluation in the market going on right now, and which tools are good and which tools are not good enough in this new world of AI. So a lot of SaaS is going to fail, a lot of SaaS is going to come up, and you kind of, if you're picking right, it's already priced in. Market is pricing a few winners and a few losers. If you pick what the market is not pricing in, that's great. If you're saying betting with the market, then you don't have alpha. That's my thought. Yeah.
I know you like Elon, and I know you are a fan of Elon's endeavors outside of Tesla. What do you think about, I don't know if it's even a competitor to SpaceX, but it's in the same world, Rocketlab?
Oh, Rocketlab. I like Rocketlab, man. I have a 1% position in my retirement account of Rocketlab, and I'm overall building it up because it's very simple thesis. The thesis is that SpaceX cannot be a monopoly. Like nobody is going to let one company to be a monopoly. And the founder has gone through a bunch of shit, man, to get this company where it is. Like it's a really a true test of will to get them where it is right now, to even have a viable business model. And even though they are not like SpaceX at this point, I think they will be very successful. It's like it can go down. Don't bet your farm on it. A lot of people are, and I like the guy, uh, Peter Beck. I like the guy.
Sir Peter Beck.
Sir Peter Beck. Yeah, he recently got knighted.
Yeah.
So he's great, and I follow them. They do small rockets. Their Neutron each launch is going to be like $50 million of something, and that's like half of their current revenue. And it's going to be great. It just needs to keep executing and being on that right track. But but there's a big but. You cannot compare on the price to sales level with SpaceX, because SpaceX is a SaaS company right now with Starlink.
Right.
Like,
right.
It's a monopolized SaaS company, and they're moving so fast right now. So So yeah, I have a big SpaceX secondary position too, just FYI. So I do follow the space very closely. So Rocketlab they have a superpower of operating very efficiently. This guy is very good at that. And that's one of the most important characteristic you need to have in the space. It's a very hard space to be in, but once you start winning, it's hard to. You're going to build a big moat out of it. So I have a 1% position. I'm slowly building it up. My cost base is like $4 or something, and I had it for like a few months now, couple of months, I would 3-4 months. I looked at his interview with I think Vince. The Peter Beck came on Vince's channel, I think.
Vince and Matt. Yep.
And yeah. So it was a great interview, and I read their history, how they are a New Zealand company with no space industry there. It's very interesting. I like that in a CEO founder, and yeah. So that's why I will be long, and I think they have a bright future there. Yeah.
Okay, last time you were on the channel was in January, and you told me the Bitcoin miners were the trade of the year, and most have done well, but this bad boy, which has also done well, it's up from 44,000, but still,
yeah,
it keeps getting rejected at
it's
70.
stuck.
Yeah, what do you think is happening right here with Bitcoin?
I don't know what's happening. But I think it's looking for liquidity. In the sense that last time what happened was in December, the guy Jerome Powell came in and said, "Oh, we're going to cut rates," or something. Like basically, he far pivoted, and then on the expectation of that, I think there was a bunch of spending in all the industries which caused inflation. That's the best explanation I can come up with, man.
Yeah.
I don't understand how the economy just started re-accelerating. I got it so wrong. It was like I was tracking it, every jobs numbers. It was trickling down, trickling down. As soon as he come and said, "Okay, we're gonna do 3 rate cuts this year," and just a little bit of pivot, just the housing market started going. I was seeing it real time too. All that there was a hot housing market. Like people started selling, that the transactions started going, the money started flowing everywhere, and like yeah, inflation started picking up again. Oil prices went up again. Like it just yeah, and then I think that's why he's not coming out and saying it this time. When we had like soft PPI, he doesn't want to do the same thing again. So he's like, I'll be hawkish, let the inflation do its thing.
Yeah.
And then when the right time is right, when I want to cut, I'll just do it. I won't like come and like do a flow forward where I'm saying like I'm going to cut next quarter. I think they'll just come out and do a surprise cut. I think that's what is going to happen. But
and
I'm not
do
betting
you think Bitcoin benefits at that moment once it's like
yeah,
clear?
Bitcoin is a global liquidity index. That's how I view it as. It's whenever there is a lot of liquidity in the system, whenever the money starts flowing, you will see Bitcoin going up. And I'm surprised it's actually held on to these levels, given all the risk assets have actually gone down a lot, except for maybe all the AI stuff and the hyperscalers and the NVDA and stuff. But overall, I think very few stocks in the mid and Bitcoin trades more like a mid cap, I would say, right? Like it's some risk on, it's a more risk on play, right? So you see all the risk on stocks have actually traced down and then traced back. Some have traced back up, and so it's not like fully risk on environment. And once we have that risk on environment, I think we'll see Bitcoin going up again. And I think still Bitcoin is the trade of the year. Like next couple of years, Bitcoin is going to do pretty well. We're going to have rate cuts, and the halving is a lot of miners are selling too right now. By the way, that's why the Bitcoin is actually like they're just dumping Bitcoin on the
Wait. Hold on. Why do you think the miners are selling Bitcoin?
I do not know.
Miners How do you know? How do you know? You think that's true, or you're assuming?
I track that.
Okay, so why the hell are they selling? What's going on?
Except for CleanSpark, everybody is selling.
Do you think are they calling the top, or do they need to finance their operations? Like,
some miners are definitely not need. Some miners definitely do not want to do not need the Bitcoin sales to finance their operations.
Right.
Some just have the philosophy, like TerraWolf and stuff, have the philosophy of selling all the Bitcoins as soon as they get it. They just do it 100% sales. They don't hold on to anything because they're operating under the assumption that Bitcoin is a commodity and no commodity maker hold on to the stuff they mine. That's one company though.
But like the Clean
the
Spark
other
Marathons of the world, I don't think they're selling, because last time they sold
Marathon is definitely selling. CleanSpark is not. CleanSpark is holding on to the Bitcoin, and historically they have been good at calling tops and bottoms.
correct.
CleanSpark, right? So they are not selling except CleanSpark. Everybody else is selling. So yeah.
Do you agree that the miners going up last week but Bitcoin going down was a telltale of Bitcoin bottoming?
I want that to be true.
Because that is weird, right? Well, why is CleanSpark up 20%, but Bitcoin's down 5%? Like that doesn't
5%, right? Yeah, unless there is some, some like shadow sales. It's like I can never understand the price action. Usually, though, miners definitely lead. So, like usually, miners actually lead Bitcoin. So I would not be surprised if we get a bounce. But up until now, that's not been the case, and I kind of suck at calling where is the bottom and top. So but I still think Bitcoin next 2 years, there's just too many tailwinds and too many people buying it, too many institutions buying it, too many sovereign funds buying it, state funds buying it, for it to go down too much. If it does, and you buy more. But overall, the asset class itself is quite proven, so I'm not fearful of holding on to Bitcoin like before.
right.
Yeah.
Okay, I got one more question for you. Shout out to Lionel Pyatt. Thank you for the 1600 of, I don't know what that is, but thank you for that. It's probably $5. So he says, here's a super chat, but you have to use it to buy one of Rocketlab's missions. All right, I will buy a Rocketlab share with that. All right, we're gonna do a little fun experiment with you, Rango. I did this with Steve. So let me explain the rules, and then you're gonna give me your list. Okay.
Oh, nice. Okay.
You are gonna tell me, starting from top to bottom, chronological order, which of the Mag 7 if you couldn't own, you would not own, starting from the top, meaning the one you absolutely want to own the least, and we're going to take it off the list, working all the way down to number 1, which is the one you would want to hold for the next decade. So in the next 10 years, we're going to slowly work down.
So is it like I buy it and sleep off and then wake up 10 years later, or is it like kind of add caveats?
Yes,
there
basically we're gonna work down from 7 to number 1. Number 1 is gonna be the one that you want to own today at today's price, and then you sell it in 2034. And ultimately, you can only own 1 out of the 7. So this is a practice to get rid of the other 6, but in the order of descending, the ones you want to own the least to the ones you want to own the most. So out of the Max 7, what is number 7? Meaning, what is the one you would want to own the least, and you could live with
Meta? Meta.
Okay, what's your logic behind that?
I just don't like the company. It's nothing. They're going to do well. I just can't own it. I just don't want to own it. I'll make it's like I know investing is morality, but I just cannot. There's just too many things that I just don't agree with, and I just don't. Yeah, it's an easy pick for me. Yeah.
Okay. By the way, in the chat, you guys can do this as well while we're going from 7 to number 1. Number 6, what would you not want to own? Second.
Can you list it out so that I don't forget the Max?
Oh yeah, let me.
Okay. Meta, Amazon, Tesla.
How do you forget the Max 7, dude? We look at them all day.
Microsoft, Google. No. I know. I just like to have it on the screen so that like I can like pick.
What's the other one? I'm missing one of them.
Apple.
Okay.
Right.
Okay. Number 6.
Number 6, which I do not want to own. Right.
Yes.
That would be Google.
Google. Okay. Why Google?
I think Google will still be around. Google will be fine. I've been doing some research. It's just that I don't think they have the culture, the hard enough culture, right now. And one thing I don't want to bet for or against is culture changing. I'm just assuming that the culture is just going to remain the same. So I cannot predict what's going to happen. So I just it is as undervalued as it is. I think for them to kind of like pivot their business model, the culture needs to change, and that's very important. And I do not I don't want to bet on the fact that the culture is changing or not. But at the same time, I would not short it. I would just hold it as a part of a diversified portfolio. I would not like it's still a decent thing to have in your portfolio, right? They have a lot of good assets. It's just the culture. I don't want to bet for or against. So that's the culture is the only reason. Yeah.
Okay. Number 5. Let me guess what you're gonna pick. I think you're gonna pick Apple.
Yeah, Apple.
Okay. Is the thesis that they're just not gonna grow as much as the other guys?
I mean, yeah, pretty much. I mean, I like Apple. I like Apple products. I think they'll do well. It's just that I think there is a transition happening at Apple. I think Tim Cook is on the way of exiting in terms of CEO because he's just too old. Um, and
Well, he's not too
as
old,
much
dude.
as
Jensen is 61.
it's,
He's 61. Like, it's not really about age, right? I think it's
no, I think he's told. I mean, he might. So I like to see like after I started failing on a lot of the undertakings they've taken in the last 4 or 5 years, and their execution has clearly slowed down, right? Um, I do not know why. Maybe culture again, but I don't see culture being. They're still operating pretty lean. I think the expertise they have on is kind of like tapered out. That like the systems, software and lower level software and like system hardware and all this stuff. So yeah, so I think they'll do well. It's just that I think Tim is this decade. I think Tim won't be here for too long. I think maybe 2 3 years after that, I think he'll be gone, and there'll be a CEO transition after that, and we don't know who's going to be the next CEO. Maybe Craig or like Jeff. They're fine, but I think that's another thing. Like they don't have a very clear path, clear TAM. You know what I'm saying? Yeah.
okay.
Yeah.
Number 4. What do you got?
NVDA.
Wow, that's a bit contrarian. What is the argument to get rid of NVIDIA?
Valuation. It's just not
You think in 10 years
valuation.
it's going to underperform?
No, I know. Yeah. No, it's just gone up. Like it's a $3.3 trillion company and ran up too soon, too fast, and it might triple from here for sure. But I cannot imagine them taking all the market share because, like, think about it from like the first principles, right? Like they are like they have to execute on the cloud hosting services, which I trust they will, but like but the hyperscalers are all there. Do you think the hyperscalers will let NVIDIA have so much power over the long term where they keep growing to be like a $10 trillion company where they are the one who are the customers and they have the expertise to actually design chips? They will have a roadmap internally and NVIDIA will keep winning. Don't get me wrong. It's just that I can't imagine them not being a hyperscaler and being the world's largest company. Like it has to be either or. They have to become a hyperscaler, right? And then they will be the world's largest. But they have a lot more execution to do. So that's why I'm kind of like NVIDIA is kind of like they have to build a lot of software tools for them to be the hyperscaler of choice.
Okay. Number 3, I'm gonna guess you pick Microsoft.
Microsoft, yeah.
Okay, why this one? You can't go wrong here at this point, but why?
I mean, it's just because the other two I like better.
Okay. Number 2.
Okay. So this is actually like this is like where the caveat comes into the picture, right? Like if Elon, the key man risk is pretty big, right? Like 10 years from now, I have to bet on the fact that Elon is still around and executing, and he will be executing as long as he's around. But he like I want to say Amazon and then Tesla, right? But there is like a pragmatic side of my brain who's like Tesla's moat is still not as strong as Amazon's moat, right? And if I'm betting all my money, like literally all my money on it, and then waking up 10 years later, right?
Don't tell me you're gonna pick Amazon as number 1. You have to pick one. There's no caveat. There is just an answer. There's no conditional answers. There is just number 2, and number 1. And I know you want to pick Tesla, but you are bringing up a good intellectual argument that the right choice is probably Amazon to preserve some of that money.
Yeah, it's
the risk to reward
capital defense.
Right, the risk.
Yeah, the capital defense. Yeah, it's more about capital defense than capital like offense. When you're young, you want to do capital offense. When you're old, you want to do capital defense.
And you're young.
But
you're under 30, right?
Yeah, but you're saying 10 years, I wake up, put all my money in. If I put 50-50, that's fine. 60-40 is fine. 70-30 is also Tesla is fine, right? But if I put 100-0, then I'll pick Amazon,
Okay, so you're going with Amazon. Wow.
Yeah.
You're going with Amazon. It's so funny. He picked the same thing. He picked Amazon as well.
No, it's purely like a capital defense mechanism, right? Like if you want me to do like 70-30, I would pick 70% Tesla and 30% Amazon, right? But if you want to do 100-0, then I'd pick Amazon over Tesla. Not only that's how it's just a thought experiment, right? Like I would want to have some of my money. Tesla's not going to go to 0, obviously, but if you put 100%, it's a company where like the path is still like as much as certainty is there. Amazon's path is way more certain.
I'm more bullish on you. I picked Tesla when I did this. I was like, "Fuck it, we're doing Tesla. we're trusting Elon."
Okay. So what happens if Elon just like something happens to him?
Then we're fucked.
100%. That 100%. I don't like. I cannot like. It's basically I'm betting on Elon's health being like. And I put 100% of my money. I'm betting that he takes care of himself really well.
Yeah.
Which I know for a fact, looking at him, that he doesn't.
He does eat donuts for breakfast. Dude. He enjoys.
Yeah, he likes to eat a lot. He hates working out, like all that stuff. So it's like Elon that's Elon for you. It's just like
no, it's fair.
Like,
the right choice is Amazon. I think because we can't see 10 years into the future. And if we can't, Amazon, they've already done a successful leadership transition. So
right, yeah, exactly.
Okay, so the final question is: if you had to pick one stock that was not on the Mag 7 that you had to hold 100% for the next.
Oh, that's actually a good question. Okay, that's a good question.
And the chat as well. One stock not on the Mag 7. You guys already know my answer.
Yours is Palantir. Yeah.
Most likely.
Let's think about that.
What people in the chat say. There's GameStop. There's Rocketlab.
GameStop. No, not Rocketlab.
Hold on. Before you say your answer, let me just list out a couple of names on.
I'm thinking of some good names.
Okay, let me list out.
10 years names. 10 years is a long time, right? Like, yeah.
Yeah. So let me just list out some names. So we got Sofi, we have ARK, we have DJT, Coinbase. Coinbase is actually not a crazy answer.
Coinbase is not bad.
Shopify,
good. Actually, I'd pick Shopify. Yeah, I'd pick Shopify.
Pick Shopify, dude. Out of every fucking stock, you pick Shopify.
Yeah, because their philosophy is building a 100-year-old company.
Yeah, but dude, they're fucking communist Canada. You're gonna pick Shopify, like.
I mean, they're a global company, right? So Shopify, they can execute. They're very nimble. They're just a company where execution.
Let me give you another one. Fuck Shopify.
Long-term execution.
Forget Shopify. I know you would pick Enphase.
No.
Has your thesis changed on Enphase? You were big on
Enphase. No. I'm still big on Enphase. It's just that there is a risk of residential solar even being a thing.
So, how much of your portfolio is in Enphase?
It's still significant. I mean, I think the risk reward over the 10-year time period is very different from like picking it over like 4 years or 3 years. Right now I still see residential. They are a monopoly in residential right now. Like. Solar is, I think, going to go bankrupt. I'm looking at the numbers. I think they'll be Enphase is the only company which is going to do residential, right? And then there's Tesla, like who might have a lot of capital to compete if it's too lucrative of an opportunity. I actually might do Nubank, man. Actually, I changed my answer. I do Nubank.
Why?
Dude,
Why new? Dude,
Nubank,
the
dude, Nubank is
Brazilian
such an
bank.
dude, Nubank is you should look into Nubank. Like you should not just write it off because it's a Brazilian bank. It's such a good company. I actually have it in my portfolio as one of my fintech plays. The product is great. There is like clear growth trajectory, and they are going after growth. And they have like 100 million customers, dude. They have 100 million. They're a household name. They're going to be like the Amazon Prime. You're basically betting. If you're not betting on Nubank, you're basically betting that the Latin American whole countries are going to go to shit.
Yeah, yeah.
So
That's fair.
they're yeah. So they basically like a big fish in a small pond of sorts, and I think they can grow into Europe. I think there is a good Latino population in America. I think they will grow into America at some point.
I don't think they're
I
coming to America. No, I do not think they're coming into America, dude.
they
They're not.
will eventually,
How
not
are they going
not
to
not
compete
in the
in
next five
America?
years. Yeah, because they just have, it's all about network effects, man. They have a big Latino population in
No.
America.
Nubank is for the
Yeah.
unbanked in Latin America. In America, there's an
Yeah.
unbanked
Yeah.
population, but Square, Robinhood, SoFi, they're all going after them, whether they're Latino,
Yeah.
black, white.
Yeah, yeah. No, Nubank's products are pretty great. It is for unbanked. I agree with you. I think they will become like the Amazon Prime of Latin America. I think they will have that kind of like super app style, like WeChat, like Tencent, that style of super app style in Latin America, and they will grow into, like, their tentacles will flow into the Latino population in America eventually.
But
There's a
why?
big,
Why?
yeah,
Like, why would they? Why? Because
because
they're in Latin America. Why would they?
they have a great product. They have a great product, and
Yeah,
they
but
already have a culture. Yeah.
Latino Americans can access plenty of great products because they're in
No,
America, even
they.
if they're Latino.
I agree with you. There will be a lot of competition, but I think they have great culture in terms of capital, return on capital employed, how they build products. Eventually, it's about what you're used to. Like, I'm in India, if I'm using like a bunch of tools, and I can just like use it when I'm in America, or if my parents use it. That's the only reason I use WhatsApp, for example. I use it because like it's like kind of like a network effect there. I think the same will apply to Nubank
Yeah,
too.
I
There's a
think
good,
what
yeah.
WhatsApp is much different than banking. I don't know. I don't think they expanded to the US. They're a good company. I think the US is
I pick Nubank. Yeah, they've showed a track record of execution in hard environments in the last 10 years. I think if you, yeah.
what about Palantir? Why wouldn't you pick Palantir for the next sector?
Oh, it's expensive right now. That's the only reason. Like I said, the same thing. Salesforce, right? Like you have to get to $35 billion. It's not offensive enough for me. Let's put it that way. Yeah,
Okay.
it's as much as I like it. If it is at half the price as what it is, I might pick Palantir. Not at these prices.
Okay.
It's not offensive enough. Yeah.
I was gonna ask you this question, but we might as well do it. Some people will be mad. Whatever. It's okay. It is what it is. Who are you voting for?
Oh, I'm not a citizen. I can't vote.
Okay, well, who would you vote for if you could vote? Because you're public about it on Twitter, so I was like, you might as well, you know.
I mean, no. See, yeah. I mean, like Trump. If your vote, Trump over Biden. Let's put it that way. I was hoping for some better. I'm rooting for Trump definitely over Biden for various reasons. Foreign policy, economy, like culturally too. Honestly, a little bit.
Who do you think
I
is
wish
gonna
there are
win?
better.
Who do you think is gonna win if you had to guess?
I mean, I think Trump's going to win big time, but
Really?
but like that's the thing. From the data set, I know I don't know what are the shit is happening during election, right?
We'll see. I think it's interesting. I think a lot of people, obviously in finance, want Trump to win. In general, conservatism, Republicans, and build little government. But I am curious to see who ends up winning. I mean, I'm asking this question because we have the debate next week. I'll be covering it live on the channel. But
I will be watching the debate too. I'm trying to slowly ask my wife to see. She'll be voting for sure. Yeah.
Oh, your wife's a
So
citizen.
yeah, my wife's American. Yeah.
Okay, so
Yeah.
who do you, if you had to guess who your wife's leaning towards, you think she's leaning towards Biden?
I think she'll vote for Trump. I haven't talked about it to her. I think she's going to vote for Trump. Okay, honestly, I don't want to out her or anything. I don't know. She might vote for somebody else, but we are more conservative household overall on our
Right.
viewpoints and stuff. So,
Right.
like even like our viewpoints are like kind of more conservative than like the current uh, Democratic Party, I would say. I was leaning more towards like center to left. I would like moderate center to left, but as I'm getting older and just thinking about a few things, I've kind of like transitioned over to
Do you
the
think if the
yeah.
S&P is at 6,000 in November, that Trump could still win if the economy is doing so well?
S&P is at 6,000 is not economy doing well, honestly.
Okay, that's fair. So you're saying even if the stock market's doing well, Trump still has an economic argument to make.
I mean, so there is a lot of pain in terms of prices and everything. In terms of like how much prices have gone up, people cannot own homes, and people's dream is to own homes, right? And in America, at least, like living that dream, right? So and also like price in middle class, they've had a lot of pain in the last few years in terms of prices and just living standards of uh, in terms of living standards. So I don't think a good stock market is going to help. I mean, it might, but as much as I know the numbers show the economy is booming, and but uh, all my people I know, all my friends, family, all they have done the last couple of years is kind of like um, postponed any big buys they want to do in life because they're just so scared. There's a
Right.
lot of uncertainties in the workplace. There's a lot of uncertainty everywhere, and the interest rates are high. They don't want to get into monthly payments on anything. So it's just one of those things where you feel the pain, but the stock market doesn't think so because it's all driven by AI earnings and AI spending for most parts.
No,
I would say.
it's a good point. And the funny thing is, if Trump, it's kind of like Biden when he got elected, the vaccine was already out and kind of unemployment started getting back to normal. So he kind of inherited an economy that kind of moved on from COVID, at least to an extent.
Right,
And
right,
Trump, if he gets into an interest rate cut cycle, I mean, he's going
right,
to inherit economy that's actually
right.
theoretically going to do better with housing and all this stuff as rates come down. So it'll be really interesting to see how.
I mean, personal opinion is not like it's just that you need somebody who's going to rein in spending more than like it's a big debt bubble going on for sure. Everybody knows about it. It's just that Trump's instinct on spending is the opposite of Biden's instinct on spending. Like, if you ask Trump about anything, like his first answer would be, "Why the hell are we paying so much money to this country? Why the
Yeah.
hell are we paying so much money to that country? Why the hell are we spending so much money on this?" That's doesn't matter what you're talking about. That's all his answers is generally. So, like, kind of like you look at that instinct, you're like, okay, his instinct is at least like not to spend money,
Yeah.
right?
Even
That's
though
that's
he
pretty
did
much it.
spend a lot of money, but his
He did spend a lot of money. Like
right.
his like for the first 3 years, he was still in when he was in first 3 years. I think he still ran $1 trillion a year of deficit. So it's
Yeah.
not like perfect. Like you want somebody else, like Vivek or somebody else, right? Like younger, ideally, right? Like RFK is also pretty great. So you want somebody else technically, but honestly, like this two-party system and what we have, you're kind of choosing a very like willing spender, like who wants to spend money on things and wastefully too. Like you see the Starlink program, like sorry, the internet rural internet program, 40 like in the charging program, like people have not they've not used the money effectively. Like if you like like okay, you're spending money, but a lot of the money is not effectively spent
Yeah.
on the things it's supposed to be spent, right? So this is what the qualm I have in terms of like, and that's causing a very long term issue, right? So that kind of makes you overlook a bunch of shortcomings the candidate has. Um,
All right.
just been a lot of pain over the last 4 years, personally too. Like especially like I've actually gone through a whole cycle of just bad law. the law and order, like somebody like breaking into the house and squatting there, and then you cannot get them out, and then like you take a whole year and a half to get them out, and that's all like very progressive policies which is screwing you over, right?
My dad dealt with it too. My dad tried to get a rent payment, went to court, never got the rent, right?
Yeah, I mean, I didn't get the rent. I had to pay mortgage, dual pay mortgage and my rent, and I couldn't get them out. And when I got back the house eventually, right, it was all destroyed,
Yeah.
and I could not. There is no repercussions for them, and it was all like there is no ceiling. That's how bad it was.
What
So
did they do, dude? They must have had
I
fun,
have no
bro.
idea. They no ceiling, no floor. All the windows are broken. All the closets taken. Like it was like a shell of a place, right? I had to rebuild the whole house and then sell it off. That's what happened, right? It was pretty brutal, right? So personally, that's kind of moved me more towards the conservative side of like small government too, because I've seen the bureaucratic. I've gone through it personally.
One would say, Rango, you have a nice job at Tesla. You're making good money. You have a 401k. You're very privileged, so you can afford to fix up that house. So why are you complaining so much about it? What would be your
I mean, that's this. No. So you can talk about the privilege all you want, but I'm on like as much as you're saying all that stuff, right? I'm actually on debt doing all that stuff. What I did. So as much as I have like uh, like if I did not have the job at Tesla, which happened at a opportune time, and my wife switching to a very good job, I would have been screwed.
Yeah.
No, it was not like I had like money flowing through paying for lawyers, and I was like I was 100 grand in the negative on a bunch of stuff. I just don't want to sell my stocks to do that shit, like
right.
Yeah,
Because
so
that's important.
Yeah, so it's like I still want to invest long term. It's like a bunch of things did work out, like in the sense that I moved to an insurance policy which was much higher premium I paid, luckily, and they covered a lot of the expenses of rebuilding the house. And I'm still suing them for getting my money back. It's not like I'm letting it go. And I can like put a hold on a bunch of stuff. Like I've dealt with it very strategically for sure, but the life is definitely not the life of a privileged life, because I as much as money we made, we live in a very small place just to deal with all this shit.
Right.
Like we had to cut down our lifestyle very heavily to actually deal with all this stuff. We kind of put our whole life on pause for 2 years just to deal with it. And we've been married only for 2.5 years. And the whole marriage has been like this, going through this shit.
I think it's about respecting private property. And I think,
exactly.
Some policies do, some policies don't. So
yeah, so it's just like it was so frustrating that we wanted to move out of California, but my wife is from California, so my family is here, so moving out.
All right. Thank you, Rango, for this. This was a lot of stuff. If you guys just joined, I have all the chapters in the description. We talked about NVIDIA, Tesla, SoFi, Square, a new position for Rango, Palantir, Bitcoin, Rocketlab, all that stuff. For those saying, who am I voting for? The benefit of covering the election is that I philosophically cannot say who I'm voting for because it would make my coverage biased. So literally, I can't tell you guys who I'm voting for. So I don't have to say who I'm voting for, or else you're going to think I'm biased when I'm covering either or. So we will be covering the debate though in 4 days or 5 days, and
that'd be pretty cool. Yeah,
that'll be fun.
Looking forward to it. Yeah.
All right, good stuff, Rango. Thank you everybody for joining. Market Open will be back tomorrow, 8:45 a.m. Eastern Standard, and let's get back to the markets. Thank you, everybody.
All right.
Have a good Sunday night. Good night. Bye-bye.